I say long live the most hateable market of all time, Becky. I think, you've seen so much money come out of the equity market this year, which is just astounding. We've had like $250 billion worth of retail money come out. You've had the biggest amount of money move from equities to the bond market like ever, which, you have investors looking for apocalypse now. Meanwhile, you have price to earnings at 17 times forward, which is like the average for the last 5 years. Economy is strong. Earnings are going to be positive this year, next year. It's just hard not to be bullish.
You say that there's one place that looks really treacherous to you, and that's the bond market.
I called it bond hell in my notes because I think it's that treacherous. If you look at it right now, you're starting to look at some of the lower quality debt that's out there in these bond funds. You're looking at all the investors jamming their money in with rates at abysmal levels. I say, God forbid we get some sort of trade deal. You start to see global growth pick up a little bit. Rates start to go up a little bit. That's going to be a huge, huge weight on the bond market. I mean, you could see bond prices depreciate like big time very quickly.
Kevin, you're a bond guy. You agree with that?
No, not really. Look, we're still basking in the sunlight of 20+% returns in the long treasury market this year. So I guess I would phrase it that the trade deal or not is a big deal. It either triggers the Fed or it doesn't. And the fundamentals don't matter until they do. So right now, I think our concern would be if there's a trade deal, that's worth at least 25 basis points to 10s, would take us back above 2% pretty easily. If you don't, then it's more like 140. But as far as the rest of this goes, we're going to pay attention to the fundamentals, like today's ISM number and the employment on Friday, to get further triggers for the bond market. But right now, I don't think it's over.
You think that there's ever going to be a day where we say, okay, we have clarity on the deal with China, or is this going to be death by 1,000 cuts, or just listening day by day, trying to figure out what goes on? I'm thinking that it's less and less likely that we'll say, okay, here's a real deal that happens, and here's kind of living in the in-between. And what's the market doing in that scenario? So
this administration has done more for volatility than any other administration on record, as far as I can tell.
You applauding that?
Well, no, but we're coming up on it again. So the 2016 elections mattered a lot. You would have a pretty low vol on one side, and you got extreme vol on the other.
You might argue that 2020 may matter even more.
Could. Yeah, I think it really
Look
will.
At the extremes.
And that could change the way we view each day. But right now, I think there's a lot of liquidity in the marketplace. I'm less worried about any kind of bubble, so to speak. Money continues to come in, but it will go out when we get to risk on again. So I like where we are in the bond market, and I'm not afraid of it. But I wouldn't put all my money out long at this point.